Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to do a short video on understanding mastering the templates and understanding the difference between getting a direction right and trading in a direction versus a scalable, sizable trading opportunity. So we go through 3-day cycles. We go through different types of templates. Some are trading ranges. Some are going to be breakout, pullback continuations, 3 pushes, maybe even a trend. Maybe there will not be a trade that eventuates. But it's imperative, I repeat, it is imperative to understand the templates. We talk about the weekly template, Monday to Friday. There are 3-day templates, day 1, day 2, day 3. And there are breakout templates, day 1 breakouts, day 2 breakouts, day 3 breakouts, first red day, correction, reversal, first green day, correction, reversal, trend trade, parabolic opportunity, session scalp, whatever that may be. But there are different types of opportunities. But again, I repeat, and I'll just reinforce this. Is it scalable? It's not about, hey, I got the direction right, I sold the high, it's going down, we're going to get in. Is this a trade that you can put size on? Because I don't want to be in the market. Let's clear that right off the bat. I don't even want to be in the market. And when I go into the market, I want to position myself in a market that is about to go vertical, whether that is up or down. I don't want to get into a market and go, oh, it's day 2 and I'm going to go long and get into this and hold it and hold it and get out here and say I got 50 pips. That's not my plan. My plan is to be in a market that could be a day 1, a day 2, a day 3 for a vertical move that goes, 50, 75, 100, maybe 300 pips. Could be news, could be a first bounce, could be just no news at all. It could be a 75 pip move because we've had Asia, we've had London, and now we got New York blowing off. And then it could reverse right off the bat the next day. But I want to be able to position myself in a market that is going vertical. Why? Because I want to make money. I don't want to get the direction right. Oh, I bought the low. I bought the low on Monday and I sold it on Friday. How much size can you put on a trade like that? How much size can you put on a trade like that? The reason why I'm emphasizing this today is that I want traders to actually stop trading and step back and understand, to recognize what type of trade you are taking. Okay, I bought the low of the day and I know that maybe it's the low of the week. Maybe it was a great trade. Again, the type of market that you're trading, you can put a position in, buy the low, sell the high, and you can get 400 pips. Perfect. Or 150 pips or even 50 pips. The type of market that you're trading in, the type of setup that you're trading in determines the type of size. So you can say, well, over time, I'm going to be able to, I got 35%. I don't understand what that means. Is that 35% on the amount you risked today? Is that 35% account growth? Is that 35% on a $10 account? Is that 35% on a $1 million account? Because traders will be willing to blow up a $10 account, a $1,000 account, a $10,000 account, and a $100,000 account in order to avoid losing. But if you can make $250 risking whatever, $100 or $75 or $50 or $150, that's different because you can scale that type of setup in size. So the templates that we will go through are repeating day 1, day 2, day 3, and we see them over and over again. We can see a Friday be day 1. And Monday, day 2. Wednesday, inside day. Thursday, parabolic move. Could be in Asia, could be in London, could be in New York. The parabolic area is where I want to enter the market. I don't want to enter it the night before and hold it all night. If I get into this market, I might be out with 50, 75, 100 pips. Is there news on the calendar? You can take a trading account. I keep repeating this, a small trading account, using 1 or 2 trades a week. So let's say, for example, we have day 1, we have day 2, we come back up, day 3. We could have a parabolic move on news on our Thursday that takes out the high of the week and keeps going, because the end of the week is going to keep trending too. It could be a trending week. It could be a dump and pump scenario. But I'm going to lock in the money, and I'm going to come back the next day and look for another opportunity to get back in. Because my approach is that I don't want to be in overnight. I'm not holding on to something. I'm in it for that 3-hour window. That's my trading time. I'm looking for my session trade, whether that's a 3-day parabolic. So again, we could have a pump day on Monday. We could have a day 1. We could have a day 2. We could have a day 3 and day 4 and a blow off move on the Friday or Monday. Or this could be a Friday and this could be a Monday. This could be a Monday. This could be a Monday. So there are multiple scenarios. I'm talking about what I'm focused on. I'm focused on this. Somebody said to me the other day, I'm just focused on the game. I just love the game, and I love seeing the market move, and I'm fascinated by it. I'm not. I'm here. It's business. It's strictly business, money, not pips. Business. It's about money. If it's a repeatable template and it's scalable, you can grow your trading business. So I talk about the stair step. We stop step 1, step 2, step 3, and we can have an inside day and we can have a blow off. Now again, I like to show shorting patterns because I like to short, but the same process occurs in the long direction. We can have a dump day on a Monday or a Friday, come down. We can have news. They trade traders back into the low. They consolidate, they go sideways, and they go vertical on major red news, or they go vertical just in a session after a 3-session or a 4-session consolidation, ascending triangle, parabolic trend trades. They show up all the time. One of the simplest things I keep talking about is just sticking to the weekly template. Monday's day 1. But we can get a Monday that comes down, and Tuesday actually starts our new day count. Day 1, day 2, day 3, and we can get an Asian session blow off. We can get a day 1, a day 2, inside day, maybe even a higher high, a day 3, Asia, London, New York. Again, major red news. And that can take out the low of the week, and we can start a new day count. Day 3 can become a new day 1. Day 1, day 2, day 3 heading into our new week. It might even be a narrow range day again, and it continues nonstop in opposite directions. Now we can talk about 3 session setups. We can get Asia. Let's backtrack this. We can go to a U.S. session high, a U.S. session low. We can get Asia. London, and New York. We can get a reversal. We can get Asia, a London, and New York. Trend trade. Again, a parabolic opportunity. So coming back to the simplest thing you can understand. So number 1, this is the easiest template to focus on. Monday's day 1. In most cases, you're either going to get a dump and a pump. Okay, you can get a dump and pump. We can get a dump that starts our day 1, day 2, day 3 for a dump. We can get a dump and a pump and a dump. We can get a high of the month on day one that breaks down, gives us a first red day, and pumps back up on day 3 for a vertical move on day 3 that breaks out, pulls back, continues to go down, and reverses into the close on a Friday. You only need 1 to 2 parabolic opportunities to significantly grow your trading account. I'll repeat a phrase that one of my mentors said to me. Size the best, scalp the rest. It's as simple as that. Master the templates. I am not here to be right. I am here to make money. That is it. That is my entire focus. So if I get a day that, is it day 1 or is it day 2? It's an uptrend. It's trending. And I can't tell what it is. Guess what? Next chart. Don't waste your time on stuff that's too complicated. To me, what's not complicated is this. Day 1, day 2, day 3, boom. That's not complicated. Day 1, day 2, Asia, London, New York. Day 3, boom. That's not complicated. If it's like this, I don't know what the hell's going on. I have no idea. Why trade it? This, I recognize. Stairs. Elevator. Stairs. Sometimes we'll get a break in structure. 1 push, 2 push, 3 push. Boom. Elevator. It's not about predicting. It's about understanding what you are looking for. What type of setup is it? This potentially may be a sizable opportunity if it's going to go parabolic. This could be Asia, London, New York. It could be Tuesday, Wednesday, Thursday. It could be Friday, Monday, Tuesday. It could be Thursday, Friday, Monday. All of these types of scenarios can play out. It's the template and the type of setup that you're about to trade. Market that's going up like this and people want to short it and they go, I don't get it. It's day 3 breakouts. It might be, but it's not set up as a template. This is a market that continues to be on the front side of the move. Why look at this type of chart? If it does this and I get a first red day, okay, maybe now we're starting to go into play. Maybe it's going to set up for a best trade setup. I really want to emphasize stepping back and understanding 3 levels of rise. And what you'll also get with that is 3 higher lows. 1, 2, and maybe a narrow range day or an inside bar, maybe not even nothing at all. But when you get this, the higher lows, guess what's happening? Somebody's getting caught buying up high. And when that goes vertical, they're going to wipe everybody out. This is how you make money. The rest is just session trades. You can get a scalp in here, maybe a trend trade here, scalp in Asia, a trend trade in London, high of the day in Asia, whatever that may be. But this is the 5-star opportunity, whether that's long or short. The same thing can apply in the down direction. Day 1, day 2, day 3 down. We can get day 3 breakouts. Several times traders have said it was a day 3 breakout. You could have a day 3 breakout that closes broken out, and it's the next day that we get our trade for a vertical parabolic move. And again, I'm not interested in buying the low. This is what I want to emphasize to traders. My goal is not to buy the low and say I bought the low and held it for 65 hours. My goal is to position myself in a market that I can size into, add positions into because it's going vertical. And then I'm out. I'm done. I want to get in that market when it's going to explode. With a 1-bar stop, I can control my risk. It's not, I love when people say, oh, it's too risky. Let me ask you a question. If you buy something here or sell it there, or you buy and sell it here, or you buy and sell it here, what's the difference if you have a 1-hour stop? And if you're adding into a position that's confirming your thesis and your risk is controlled, what is the difference? You could be buying it here because you think it's going to go vertical. And you're sizing in. When are you getting out? How much are you willing to lose? Step back, though, and understand the bigger template. 1, 2, 3. It didn't play out. Oh, it's an inside bar. It's day 4 breakouts. No, it's actually day 3 breakouts, but now the market is triggering new breakouts and reversing on that day. We have day 3 breakouts, but there was no setup. But there's a setup brewing over 3 sessions for a large scalable opportunity. I'm not worried about buying the low, selling the high, catching this move, catching that move. No, I want to trade as less as possible, but as big as possible on 90-10 setups. I'm not guessing. I am not guessing. If you want to guess or you're frustrated or you don't see the bigger picture, don't do anything until you can count 3 days. 3 days. And even then, hopefully you have some sort of stair-step escalator setup. Not just, it's day 3, I'm getting in, I'm going to short the market, and it keeps going higher. That's not a setup. So we can take a quick look at pairs, and I want to explain something else about the rationale in the thought process. We're looking at Canadian dollar. I talked about this template before on a day 1, Monday day 1. We'll put that in there so people can see it. Monday is a day 1, and I talked about a day that is split. Remember, we talked about day 0, a day 0 day. There are day 0 3-day setups, there are day 0 days, and there are day 0 cycles in terms of templates. So here we go. We got our day 0 setup on a Monday. Do you know what that tells me right away? We're going up. Why? Peak formation low, peak formation high. They take out the high inside. Who's in the market? Who's in the market? It's an inside day on day 2. Our initial balance, opening range and initial balance are in place. We have an opening range now that has split. This is a day 0 day. Study this day. If you see this on a Monday, understand what that means. It could be a Tuesday, but understand what that means. Day 1 is Friday. Day 2 is Monday. Day 3 is an inside day. Inside day goes parabolic on our Wednesday, which is day 3 of the new week in our London session. Parabolic opportunity. Now we're in breakout mode. This is a breakout, a market that's broken out, and there is no evidence yet of this reversing. So let's just take our lower daily highs, the lower highs that I talked about, because why? That's where the money is. Breakout, this is a market in breakout. It's pulled back somewhat. This market could continue to go. There's no evidence of a reversal. It closed out of balance. It continues to close out of balance. Day 1, day 2. Day 3 is tomorrow. I don't know what's going to happen. It may continue to trend. It may give us some evidence of a first red day reversal. We have major red news. No idea. But I will have a better idea when I come to the session that I'm trading, which is New York, as to whether or not we have an opportunity for either a trend trade or a reversal trade, or it's not even that attractive to me and I'll look at a different instrument. But this is what I wanted to emphasize, because this was an opportunity on day 3 for traders if they weren't looking at other instruments, gold in particular or anything like that. And also on day 2, recognizing that we've come down into the breakout and we're on inside day. This is not a reversal inside day setup. This is a trend continuation trade on our day 3 right out of the playbook. Page 69. False break reversals or a trend trade. I want to point out to traders that when we start a new week, we have a 5-day template. Monday, Tuesday, Wednesday, Thursday, Friday. That's a different opportunity. We also have 3-day setups. That was the false break at the low of the week. Over and over again, we repeat this. False break, volume trapped outside of the low of the week. That starts our new day count. When is it confirmed? When they break the high of Friday. We have a split day. Go back and study your Mondays. You will see this pattern. Sometimes on a Tuesday. This is a split day. Peak formation high that forms a peak formation low and breaks the high. Who is in the market? Longs are. Are they still in the market at the close of Tuesday? Yes, they are. Where is my bias heading into the next day? How often does the Canadian dollar blow off in Asia? Not very often. Is it possible I could see it move in London? Absolutely. Is it on my radar for a possible best trade setup today? Yes, it is. Are there any other instruments that are set up better? Yes, there is. No, there isn't. If there is, I'm going to look at the other one, but I'm going to come back and study this to see how it would have traded. This is an hourly chart. Let's take a look. This is our Wednesday. We have breakout traders in the market. We know our inside day longs are in the market in Asia. They go higher in London. That is not a false break. What is that? Higher highs, higher lows. That is the setup for what? The dump and pump. London session. Major round numbers. You can go to a smaller time frame. This is a 5-minute chart. This is why I use a smaller time frame. When we get into a trade setup that is already a bigger picture scenario, I'm looking for the tightest entry possible. If we put our universal criteria onto this chart, the EMA on there, we get filled 30 minutes into the London session on a vertical move. Can I get a tighter fill on the 1-minute chart? Absolutely. Can I add in on the 1-minute chart better? Absolutely. That's the only reason why. The only time I go to the 1-minute chart is when I am at the extremes. This is pulled back into our breakout. When? London open. Do I have an opportunity to get in the market? This is where I'm going to get in. I'm going to probably get in fairly strong here. And then I'm going to add in because the market's about to go parabolic. Add in. Parabolic move, take money off. If you're going to hold a position for a larger continuation move on day 3, that is entirely your decision. If you're just in there for the session to take the money off the table, that is something you can do also. Day 3, you might want to leave a trailer in, get a bit of extra gravy, whatever that is, but any evidence of a reversal, major red news, any of those sort of scenarios, then obviously you have to weigh that up, but be flexible enough and adaptable enough that if it continues to move strongly, that you're willing to let maybe a trailer run. Getting back to the hourly chart, just for simplicity's sake, we're still front side, day 1 breakouts. So some traders would come back and say, that was day 1. You're correct. You are correct. But that is our opening range. Day 1, day 2, day 3, we have a reset now. And we have a market that continues to go day 1, day 2, and possibly day 3 tomorrow. Now we're looking at the euro, and I'll explain why this is significant, because we have day 1, day 2, day 3 are Wednesday, and then Thursday we're inside. So a lot of days, day 4s, if you want to call them that, are days that traders can get chopped up on. Why is that? Because the first 3 days gives them a great trade setup, and then they can't figure out what's happening on day 4. This is an example of a market that is potentially in a trading range, day 1, day 2, day 3. And when I see a major pair, because I follow the 6 major pairs and I look at pound yen, euro odd, and pound odd, primarily because the spreads are reasonably tight, but also the major pairs, I'm looking for one good setup. That's it. I'm not looking to try and figure out where they're all going. I'm just looking for a template. I'm just looking for a setup. When I see a range-bound market inside, now prior to the U.S. session, we were inside. When I see an inside day on day 4 on one of the major pairs, I immediately go and scroll the cross rates. I will look at Euro CAD, Euro odd, Euro yen, pound Canadian, pound odd, pound yen. I don't look at the pound New Zealand very often. My spreads are wide, too wide for me. Unless it's really set up really well, I can handle the spread. I'll just take a smaller position, but I'll add into that if it's going to go vertical, but it's usually my last choice. Because again, I'm not too concerned about pips. I'm concerned about, is this an opportunity that I can size into? I don't care if it's 25, 50, 100, great. If it's gold and it's set up and it's a 3-day setup and we have an opportunity for an explosion, I'm going to be sitting there focused. And that brings me to another point. Shut all the crap off on your computer. Shut everything off. Shut all your social media off. Shut everything off. Pick a couple of instruments and get really super focused. Okay, it's not a game. If you want to make money, it is not a game. You are playing against the best. And if you're frustrated, quit farting around. Shut everything down and get super focused. Figure out what a setup really should look like. So we're looking at the euro. and we're inside. Okay, we had obviously a 7 a.m. hour vertical stop hunt to the low, but I'm talking about the bigger template, day 4, it's inside. So the first thing I do is go and look at the cross rates. Now again, it only takes 5 minutes each day to check these templates. So we have a day 1, day 2. We have opening range breakout. This is the Euro Australian dollar. Opening range breakout on Tuesday that reverses into the close of the session. Okay, day 1, day 2. But we took out the high of Tuesday in the Asian session. This immediately makes this a day 1 for me unless it breaks down and gives me a low-hanging fruit continuation trade, which it did not. Day 1, day 2, day 3 blows off in the direction of the trend. Trades higher before breaking down into the open of the Europe-London window. Breaks down before the session starts. If you've been following me long enough, you will hear me repeat this. If it breaks down before the session starts, that is a setup for, if it breaks down, for a pump and dump. Okay? It goes vertical into the beginning of the session. There's a pump and dump setup. That's a dump and pump setup. This goes down before the session starts. That's a setup for dump and pump. It goes back to the high of the day. We already have breakout traders in the market. They break the new high. When we have a high like that, we just redraw the high of the day. Day 1, day 2, day 3. Now, when we get to the extreme, there are traders who, this is a 15-minute chart, lift the offers, pull the bids, escalator up, elevator down, escalator up, elevator down, escalator up, 1 push, 2 pushes, Aussie dollar news, 3 pushes, collapse, low-hanging fruit in the U.S. session, escalator up, elevator down. There is nothing new under the sun. There is nothing new under the sun. But you have to master the templates and be patient enough and willing enough to step back and understand, again, the difference between getting a direction right, buying the low and holding on to it, and versus getting into a market that's about to blow off and sizing into it. Making money, not pips. Pips are great if they're scalable and reproducible in size. Wait. It could be a Friday, Monday, Tuesday. It could be a Tuesday, Wednesday, Thursday. It could be a Monday, Tuesday, Wednesday. We can look at any market, but I'm going to encourage you to go back and study and just understand the bigger picture. So Monday blows off. It's the first red day, but we get day 1, day 2, day 3. Escalator. 1, 2, 3. Engulfment. And collapse. Now we're back into a day 1, a day 2. A great question today from a trader. When did you form a thesis that this was day 1? Good question. This was day 1. It broke out of the opening range and pulled back and closed. It could easily still have rolled over at some point today and continued downwards. But we made higher highs and higher lows. Higher highs, so if we came up and we have a peak formation high in Asia and we have our low from the U.S. session, there's our consolidation. We made higher highs, higher peak formation high, and then a higher peak formation low. We now have a first green session, if that makes sense. We went higher before the U.S. window started. The higher highs and the higher lows automatically, to me, makes this a day 1. Could be wrong. This could have rolled over and failed. And in all fairness, this is not a day 1 until we break the high. But the higher highs and higher lows, this was a dead giveaway. Coming back, if we just look at our overall big picture, we have our highs of the day, again, targeting where the money is. We have our highs of the day as potential targets. Trader asked me that question a while ago. I don't understand what you mean by targets. There's money there. There are traders in the market. There are breakout orders pending. There are stop loss orders. There are all kinds of stuff. And currently we have consolidated sideways underneath. So this market is either going to roll over and fail Friday, Monday, Tuesday, whatever that may be, or we're going to get some kind of pullback and a possible parabolic setup. It is pipped up there, but it has not exploded through. So we will have one of two scenarios. And I have no idea, because I am not in the business of predicting. I am in the business of coming to the screen in the session that I'm trading and looking at whether or not there is an opportunity there for me for a best trade setup. Which, in closing, we'll just talk briefly about the Aussie dollar, because even something simple, if you master the process, will make sense to you. We have a market that makes a high and a low, initial high and low, in our Asia and London session on Monday, day one. It breaks out and fails, day one. We have an opening range breakout on the long side on day two. That's our initial balance now. That's our high and low of the week. 80% or more of the time, one of those extremes will tend to hold. We get a day one, day two, day three setup from the high of the week. Peak formation high continues to go lower. We get a peak formation low in on Wednesday. Peak formation high, high of the week, peak formation low inside of our existing low of the week that failed and breaks higher. We now have a break in structure. Day one, day two, day three, dump, higher high, higher low, and pump, higher high, higher low. We had major red news. Take a look at the candle just prior to the news. Pin hammer on a higher high, higher low, dump and pump setup, except we can't take that because there's major red news. We have major red news, and then we get our first bounce opportunity to enter this market on day three with a parabolic opportunity. First bounce trade for an easy 25 plus pip trade through the high of the week. So again, understanding the importance of the setup, not about how many pips. This is a sizable opportunity for traders to get in after the news. Okay, high of the day, high of the week, but after the news. This is a reversal on day three, coming out of our setup, a 3-day setup for a parabolic move. Zero stress, zero emotion, zero heat, tight risk control, profit target, 3 hours. Why? 1 hour, 2 hours, 3 hours. We talked about the power of 3. I have no idea this could keep going, except that we break the front side of the move. I'm locking in the money. I'm getting off the screen, and that's it. Keep it simple, traders. Focus on the best trade setups. Focus on what setups will make you money, not what setups are going to cause you a lot of stress and a lot of time sitting at the screen. When is the market about to go vertical? That's where you can position yourself in the market to make real money in the session that you're trading. Don't see it on your favorite instrument. You don't see it on your favorite instrument? Scroll and look at other pairs. Look for an easy opportunity. Okay, so this market gave me easy money. Isn't that what I'm here for? Easy money. Not complicated, not to prove how smart I am, not to prove that I figured out the markets and all these other things. I'm here to make money. That's it. Simple as that. Get in, get out, get off the screen, rinse and repeat. 1% better every single day, traders. Keep it simple. Keep getting better, and may the markets go with you.